Good morning, everyone. This is daily trading analysis with the weekly recap for this week that has been very difficult to trade due to CPI, retail sales, and PPI, all three critical fundamental information, and a lot of Feds saying, reiterating, highlighting the concerns about the rate cuts ahead, that they are not confident yet, and these results on the fundamental data are not really promising, really optimistic for that way moving forward. So on Monday, we got no news. The Fed mentioning what I was talking about. Tuesday, we got CPI, and it was quite a miss. The core inflation year over year was flat at 3.9. We were expecting a downtick to 3.7, but that never occurred. In terms of month over month, an uptick higher. So this is both a miss in terms of expectations and general inflation rate also ticking higher. Look at this, month over month 0.3 instead of the previous 0.2 and the expectation 0.2, and year over year we are going a little bit lower from 3.4 to 3.1. We were expecting below 3, 2.9. So again, I think this set the tone for the week with a big miss. Wednesday, we got the PPI for December that ticked lower. That was pretty nice to see. Goldsby, Barr, and Bostic again, raising concerns about CPI not yet under control. Thursday, we got retail sales quite in the negative, So consumer strength was showing that was pulling back a bit, minus 0.8 on the month-on-month for retail sales. We were expecting obviously a little bit of decrease in January after holidays, but minus 0.8 was quite a surprise. I think this is, in terms of inflation, this is a big hit, big meet expectations. And in terms of manufacturing, New York Empire State Manufacturing Index in the negative. Philadelphia Fed Manufacturing Index 5.2, a tick higher from the minus 10. So manufacturing continue going higher. And finally, on Friday, the big day in which 4.5 million option expirations also expired on Friday 16th. PPI was the final nail in the coffin, 0.3. From a negative reading, we were expecting a little bit of an uptick, but we got blowout, 0.3. Michigan consumer sentiment preliminary for February, it's still quite high. We're expecting an uptick to 79.6, but I think the damage was done with the PPI and CPI big misses this week. In terms of the rate cut path, we are now moving towards this hold in May. Remember that at this stage in May, we were saying like 50% or even 60% rate cut to 5.25, but now we are moving towards the hold at this current rate. So March, 90% probability of not cutting, 61.6 for May not cutting, and then we'll start cutting again. One time, 2, 3, and 4 to end the year with 4 rate cuts at 425, 450. That's more in line with what the Fed was basically projecting last year. 3 rate cuts, maybe 4, depends on what's happening. I think this is more realistic, and that's why we are changing the sentiment on the markets also on the technical side. So this is critical for you to realize. Don't think that all-time highs occur every day, unless you're NVIDIA. But just be smart. Analyze the data. The data is saying we are not prepared yet. So just be patient. The price action this week has been really, really difficult to trade. This is the NQ continuous chart, back adjusted, remember. So this is the weekly chart. And do you remember this week, the past week, this week in which we pulled back and we held this imbalance? So this happened again after 1, 2, 3, 4, and 5 weeks, consecutive green weeks. We are now again pulling back. This imbalance was already bounced off, and we touched and retraced from all-time highs this week. In terms of the daily, we can also see how the movement is struggling to continue. This purple line is the 20 simple moving average, one of the most used moving averages in all the trading environment. And this is the 45. So the 45 was tapped. Now we are dealing with the 20. And in terms of the daily, you can see how all pullbacks have been bought up until recently, which I think this move, it's quite telling. Because two things. We have still this daily imbalance that everyone is watching, also this pivot inside that, and also this liquidity on the daily. I don't think we are going to see again 18,000. We got 18,000 right here and we got rejected. And this is, in my opinion, the top for now. What I'm expecting basically is just to retrace back to feel again this imbalance, do some kind of stuff, and continue the sell model through this imbalance. There is no imbalance here. The first one is this one and was already used. So if we start doing this kind of thing and go through the imbalance, I'm starting to lean more toward the sell side and start thinking about repairing the liquidity and gathering liquidity for the next move higher. This will come way later for now. So for now, what I'm watching now, talking about intraday, it's on the 30-minute chart. Analyze what happened on the CPI. This was the CPI. And then one higher low, two higher lows, Thursday, and now Friday with the PPI, big sell-off again. How could you know this? Well, since the start of the week, I've been checking, as you can see, there's a fib retracement from this high. I've been talking about this all week to this low. The fib retracement, this is the 50% retracement, and then we have the golden pocket marked like this. On the CPI, we went lower and then we start crawling back up until we complete this. And I was quite bearish on Friday. I told you that on my video because we were all these confluences of fair value gaps and also this pivot, I think, was quite telling that the market wanted to just take that. They took that liquidity and we started on Friday just pushing and pushing and pushing. But look at this nuance. You have to think that anything can happen and every little nuance can mean a lot of things. Do you remember this spike higher manipulation move and then moving lower? So that's what happened on Monday. Then on Tuesday, we got the CPI. So this manipulation move was pretty big. And in the way moving forward, moving downward, we have this. Let me zoom in. This is an order block. So I've been also putting that throughout all the week, waiting for the market. I thought the market would pull back here, but I still have structure, very structured up here. We got this order block and then we got this 15 minute. In hindsight, this might be, yes, okay, we know that, but this order block was a big one because it was the first one after the manipulation move to the upside that mark the all-time highs for now. So if we go down to the 1 minute chart, we start seeing Friday's early overnight action. We marked that the low, and then in London it just goes straight and straight and straight and straight and straight. And look at this, there's no trade. I couldn't find any good entry. There's no manipulation through the lows. There's no big fair value gap that got tapped twice. This is just momentum trade that I don't take it anymore. So luckily, I follow my strategy and there's no entry. I watched the entire overnight how the market was pulling into this order block. So this blue was the order block, moving higher, 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 and then this displacement that opened a 5 minute fair value gap. This consolidation and then the news. This is why you don't hold on news. This is PPI. Look at this move from 17,992 to 911. 80 points in 1 or 2 candles. So that was my change on sentiment. The order board was respected, opening inverse fair value gaps and just dumping. Okay, let's see how we hold this. So then I started watching this pullback, big retracement, 50% and Gondel pocket as always. And look at this discount and then continue moving lower. So the day was pretty bearish. Friday, options expirations, quite bearish into the open. And then the dump, pullback. I was not buying this and I just closed it for the day, looking ahead for my weekend. And then the day is finishing towards the low. This day, I had the opportunity to do as always, buy the dip and continuation higher to squeeze all the shorts, but that never happened. So on the 30 minute again, Friday was quite bearish. We got our opportunity to continue doing that, but we have this manipulation move that started the selling model, and I really think this was a nasty bull trap in this order block. So my expectations for next week is just I'm quite bearish, and we are starting to look towards this sell side liquidity and also this one, and then entering the, let me just go to the 1 hour. So what do we have down here? We have this 15 minutes. So I think we are going to continue lower through this 15 minutes and then inside the daily. That's the daily. No, I think that's the, let me confirm that. Yeah, that's the daily. So that's what I think. That's what I think. Now that we have this so-called lower high and this all-time high, all this structure, even in this day, in this 4 hour, you can see that the power of the sell model. This was a nasty bounce, and then we are again moving lower. So I'm quite bearish. I don't think we are going to see this. This is low probability. If you have enough experience in the market, you don't expect this. So let's see what happens in the overnight. But I think these kind of things, entering the daily, then the bond structure, and then going through it, that would be it for a larger pullback. Until then, for now, short term, this 15 fair value gap below all these weeks, and even in this liquidity inside the fair value gap, I think we are going towards that. So how the big tech stocks deal with this week? Pretty bad. Apple, after this huge day on two on after earnings is still pretty weak. High, lower high, lower high into this base that is the fair value gap on the daily. I'm quite bearish on Apple. I think so. Microsoft, it's finally pulling back, leaving behind that gap. Tesla, it's continuing moving higher. It has its own thing, its own catalyst with Elon Musk, with all the Tesla production sites and all that stuff. So I really think Tesla, it's not following the rest of the Magnificent Seven. Amazon leaving a gap behind that we are now. It's providing support, but once we start moving lower, I think it's just following the rest of the big tech stocks. Remember, profit taking might happen more hard now that on equities we have a clear sell model. So be prepared if you hold some of these. Google, pretty bad day for it. Nvidia basically flat. Look at this move. People is just holding and buying and holding and buying. So what can we expect? Maybe a pullback here, taking this liquidity is, I don't know, maybe 700, 650. But people is watching 800. This is a price target that maybe we got a final blow up and then a big day down. Who knows? Nvidia is a bit. Meta is just pretty strong up here. It has no signs of weakness. We took all the liquidity that I was watching here. So it happened. And now we have the other way around. We have all these weeks here that we can just take and think twice. So if we start moving lower, all these people is going to get stopped out because this is now money. This is now money. All these people is just be very careful. If you're holding Meta, I think you should take some profits. So finally, we got our review. Expectations is lower for the equities. Let's see if we have correlations in other markets like the dollar. The dollar go up and then go down. On the 1 hour, we have basically nothing, just volatility, ultra high volatility. We got a gap that we filled. We had some liquidity up and down. And if we check the daily, it's just hesitating. At this level, we should see more. If we are bullish enough, we should see more follow through movement. That's the only thing that I think may provide some upside a little bit, not through all-time highs on equities, but I think dollar should continue higher. And that would be a pretty big indicator. We are right now in a very fair value gap, right at the middle. And we pull back. Let's see if we reclaim and enter again. And that would be quite telling for equities risk down. In the small cap world, it's also quite hot. I think small caps is one of those. If we check the IWM SPY relation, look at this relation, 0.40. So in comparison, small caps are ultra underbought. That's why a lot of people is starting to see these kind of things as bullish for them. In comparison with the S&P 500, this is super oversold. And there's a rotation. The small caps are performing better than the tech stocks right now. And as you can see, the NQ, it's on the top. And my expectation is moving lower. So if you have the opportunity to rotate some of that stuff from tech to small caps, I think you will be doing fine. Treasuries, well, wide. I think this was nasty. Now we are moving below this zone. So yields are also going higher. The expectations are higher for longer. And as you can see, I have also now here May, June, and July interest rates, and they're going higher. They are going higher. So the market is now pricing in higher yields for longer, and sadly, that would be a disaster for us because inflation is also showing that it's not progressing as expected from the Fed, and we have an adjustment on their interest rate cut path. That's what happened this week. Finally, a change in sentiment. Price action was quite difficult, but I gave you the analysis, my analysis, in which this Friday was. That's why you have to have risk management. These kind of bull traps happen. This nuance of order block in the 15 minutes was there all the time. And I think this was the initial manipulation move to the downside for starting the sell model in the algos. So be really careful because right now we might be under control of the sell model of algos, and the sell pressure would be quite high next week. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel. I upload videos like this weekly recap every week on Saturdays to review the week in both fundamental and technical sides, and also prepare for next week, analyze, study the market, and if you have correlation with other markets, it's a strong bias for next week. I'm quite bearish for next week. Let's see if we start taking liquidity to the downside, as you can see in the charts. But for now, just study, analyze your trades, make your plan for next week, and enjoy the weekend. You have to also take some rest. Monday, it's an early close day, so I won't be trading. I recommend you do the same. I don't think market is going to move that much. Starting on Tuesday, yes, be centered, be focused, be smart now with the situation in which we are right now. And don't be naive thinking that market every dip will be bought up for now. I think right now the sentiment has changed and we have to be flexible to adapt to this market. So stay safe, everyone. Remember that discipline, patience, risk management is going to be key for your success. Have a nice weekend and see you on Tuesday.